Hello, this is Alexander Green, Chief Investment Strategist with the Auction Club. And today I want to talk about how to buy stocks at the bottom and ride them higher for maximum short-term gains. And when I say buy the bottom, I'm not talking about the bottom of the market. I'm talking about the bottom for individual stocks. There's a big difference. Nobody can actually time the market because what happens next week or next month depends on the news next week or next month. And there's two types of market timers: those who don't know what they're doing and those who don't know they don't know what they're doing. And lately, I've been hearing from a lot of investors who think maybe it's time to get out of the market, that things are looking so bad with inflation running so hot and the Federal Reserve taking interest rates higher and China back in lockdown mode again, supply chain snags that are happening globally. And they just think maybe it's time to get on the sidelines and they'll get back in when it looks a little better. The problem with that is twofold. The first is all those negative things that I mentioned that are talked about in the news every day are already built into share prices. No one is going to sell their stocks tomorrow because inflation is higher, because the Federal Reserve is taking interest rates higher. That's well understood. And there's an old saying that if it's in the papers, it's in the price. So there's no use selling because of what the market has done or because of what the news has been, because the market will react tomorrow to tomorrow's news and next week to next week's news. And you can't know that today. However, you can know when individual stocks have bottomed, because there's various signals that you find, not just metrics like how cheap is it based on price to sales and price to earnings and book value and dividend yield, but oftentimes the people that run the company, the insiders, are buying huge amounts of shares themselves. And during market sell-offs in the past, during the financial crisis and the Great Recession, the insiders bought at the bottom. Not because the market was bottom, because they knew their stock was selling for a lot less than what it was worth. And during the coronavirus crash, insiders stepped up and they bought their own company stock, not because they knew the market had bottomed. They didn't know that. They can't tell any more than us when the whole market is bottomed, but their own shares were undervalued, and then the market bounced back. And today, here we are in the middle of 2022, and insiders are buying in record amounts, not because they know the market has bottomed. It may well not have, but because their stocks are so cheap, they just can't pass up the temptation to buy them when they're down. So I was recently interviewed by my colleague, Rachel Gearhart, and we talked about exactly this phenomenon, not how to time the bottom of the market. That simply can't be done except in hindsight, but how to buy companies, great companies, at fire sale prices and boost your returns going forward. Because while it always seems scary at the time, people look back and they kick themselves if they don't take advantage of opportunities like these. And so I sat down with her to talk about which companies are the most undervalued and how we know. And I encourage you to click on the link below and listen in on that conversation. That's it for today. Again, this is Alexander Green, Chief Investment Strategist with the Auction Club. Thanks for listening.